Randy is the president and CEO of Wheaton Precious Metals. He started with Wheaton River Minerals in 2001 as an exploration geologist. He was promoted to director of project development, and he held that role right through until the merger with Gold Corp in 2005. He was involved with the founding of Wheaton in 2007, became president in 2010, and then CEO in 2011. Randy has served on many corporate boards and continues to do so. He's on the board of the Special Olympics, Mining for Life, and he's the co-chair of Minerals Ed BC. He is also the chairman, as of 2020, of the World Gold Council, a role he continues today. This is when we introduce Randy Smallwood.
Thanks, Mark.
All right.
There's a lot of Wheatons in that list, but I just want to correct. I started the original Wheaton River in 1993 when it wouldn't even have got an invite to this conference. And so it's been a long time with the Wheaton name.
Well, let's go back to that. We were just talking before we came up here about how you started. Well, you say the word as a dirtbagger.
Yeah. I fell into this industry. I actually didn't even start working in this space. There's no mining heritage in my family, but no geology or anything on that side. My dad ran a small business, funny enough, an auction house. And I tell you, if you ever want to learn about business and transactions, an auction house is a great place to learn that. And so I grew up in an auction house, but I had no interest in actually continuing in that, and much to the regret of my father. But fortunately, I had two younger brothers that took that on. So I fell into the mining business when I was 22 years old, 23 years old. Wasn't happy with what I was doing at the time, and someone offered me a job staking claims. And up until that point, I'd spend pretty well every weekend out exploring and doing stuff in the wilderness, and just really enjoyed the outdoors and what it brought in. And I still remember that first day coming back from staking claims, going, I just can't believe I'm getting paid for this. This is exactly what I've been made for. And so I actually spent about 3 or 4 years dirt bagging, soil sampling, rock sampling, prospecting, staking mineral claims. Back in the days when you didn't do it on a computer, you had to walk the 2.5 kilometers, 2 kilometers, 2.5 to in BC on mountains that are like this and all sorts. By far the best shape I've ever been in my life. It's been a long time since I've seen that side of Randy. But yeah, no, that's how I got into the business and experienced the hunger and the challenges. And I mean, some of my fondest memories are some of those toughest camps out in the middle of nowhere, snow, sleet, slush, rain. Trying to get projects moving forward. And so yeah, it's a good start.
Let's talk about Silver Wheaton and how that came to be. You guys and gals were pioneers in the streaming business. What's the backstory there?
Well, and then as I mentioned, there's a lot of Wheatons in that sort of hierarchy. The original Wheaton River was a company that I joined in 1993. And I joined it because they decided to take on a very aggressive exploration campaign up in northern British Columbia at a mine site that I'd actually worked with at Homestake in a couple of years earlier. And within months, we had great success. We uncovered a couple of very high-grade, small scale, but very high-grade gold deposits. And we kept on pushing those forward. And because it was already an existing operating permit, permitting was relatively easy in terms of doing that. And within a few years, we'd actually had, again, a small scale, but very profitable, very important, very profitable gold mine through the 1990s. There's a few people here that were in this business in the 1990s. You remember how ugly the business was at that time. We were producing about 100,000. I think our best years at that mine were about 100,000 ounces a year at a cash cost well below $200 an ounce, probably about $130, $140 an ounce. So it was profitable even in the worst of the gold times. And that ultimately became Gold Corp, which has now been swallowed up. But that company called Wheaton River, we had the good fortune of having Ian Telfer come in and take over the company in 2001. So that's the Wheaton River that most people think of, is because Ian Telfer, of course, much higher profile. And the reason he came in to take our little company over was because over the course of 5 or 6 years, we'd built up a balance sheet. We had more cash on hand than what our market cap was. That's how bad it was in the gold market at the time. That's a huge advantage for them to come in. And so he came in as the new CEO, and Mr. Telfer's got incredible vision in terms of where he'd like to go. And I remember, everyone talks about forks in your career. Very early on in that, he made a comment to me. He says, I was at that time, his reputation wasn't all that good. And I'm a geological engineer by background and pretty focused on, we're doing the right thing, building good quality projects and good solid operations. And Ian's a little bit more promotional. And I was having a little bit of a tough time sort of reconciling that. And I just remember there's one comment that he made to me. It still sticks to me to this day. He comes into my office. I was actually looking at possibly shifting over to another project, another company, because I wasn't too sure where Ian was going. He came in, he said, I don't have any problem accessing capital, and I want to build the best gold mining company in the world. The problem is, he says, I don't know anything about mines. Ian was always very, very realistic in terms of what his own capacities were, and it's one of the reasons he focused on having such good people around him. And so he says, I don't know anything about mines. He says, so I need someone like you to tell me which mines to buy, but more importantly, I always remember this part, more importantly, which mines not to buy, which mines to stay away from. And there was enough in that talk in terms of talking to them that I fortunately decided to stick around a bit. And boy, what a ride that's been. In 2004, we created Silver Wheaton out of the original Wheaton River. And right around that same time, we merged the original Wheaton River into Gold Corp and took over Gold Corp and kept on building that. And so Silver Wheaton was 2004. It's kind of funny. One of the problems we had in the original Wheaton River was that we had too much byproduct. We were trying to be a gold company. We had copper coming from Alhambra out of Argentina. We had silver coming from our mines in Mexico. And people were looking at us and saying, you're not really a gold company, you're diversified. More than half of our revenue wasn't coming from gold. And so we spent 2003 trying to do the first ever streaming deal with MIM on the Alhambra mine. We wanted their gold, they wanted our copper. In the end, they weren't prepared to take the commitment on gold prices. They felt that gold might outperform, and they didn't want to be on the wrong side of that trade. And so it was a wasted exercise, other than the fact that it opened up the concept of streaming byproducts. And we decided the next go around, 2004, to create the first ever stream, but we did it internally. We created the company with our assets in Mexico, which we owned 100% of, took that silver and put it into a streaming company through that first ever stream. And it took us a few years to sort of realize what we've done, because to be honest, we were still focused on building and running Gold Corp and growing Gold Corp. But that first stream, that first concept, that mine that we had in Mexico, the San Dimas, the Tayoltita mine, is now owned by First Majestic. It's an incredible mine. It's been running for hundreds of years. The Spaniards were the first ones there hundreds of years ago mining this, and they've got more reserves there than they've ever had under First Majestic's tutelage. But that mine, that one asset that we bought in 2001, first ever acquisition for the new Wheaton River under Ian Telfer, we paid $110 million for that. And by 2008, Gold Corp had collected over $4 billion in value from a combination of selling the mine, ultimately, with the stream on it, but creating Silver Wheaton, the equity portion they had, moving it all the way up. And in 2008, they did, at that time, it was the largest secondary offering in Canadian history at $1.6 billion. But what it did in 2008 was then freed us up. We didn't have the overhang of a significant shareholder going forward. I switched over to Silver Wheaton on a full-time basis in 2007. And 2011, I took over as the CEO of the company. 2013, I realized that where we wanted to go, there wasn't enough space in the silver space. We like silver. I still, even though I'm the chair of the World Gold Council, I still like silver more. But one of the challenges is there's not a lot of silver in this world, and especially for us to grow that company. So it became Wheaton Precious Metals, and we now produce, we produce more revenue from gold than we do silver, but silver's still a big healthy part of our revenue stream, and here we are.
Right. And Bruce, maybe you want to jump in. And what's your impression of what Randy and Wheaton Precious have accomplished over the years with their model?
Thanks, Mark. I mean, Randy and I were discussing this beforehand, and he would never tell us without asking him the question and forcing them. But if we can talk a little bit about the performance record of the precious metal company, even the original Wheaton company since the early days, the performance numbers are staggering. And I mean, I think you had some of the numbers quoted there, Mark. Do you want to?
Well, just going back 5 years, as of now, according to Google, 124%. Not bad, given the circumstances the last several years. Franco-Nevada, hugely successful as well, 111%. So you're beating them by a bit.
We're in good company.
Yeah, absolutely.
So I think the variable question to all that background is what have been the keys to your guys' incredible success?
Well, and I mentioned it earlier on, and I'm a geological engineer. I really focus on the technical side. The streaming industry, and I remember when we created the model in 2004, I'll be honest, it never left the bottom drawer of Ian Telfer's desk for 2-3 years, right? We created it. Lucas Lundin, bless his soul, he was one of the first people that recognized the value that the streaming model had. And so we created this model, and now we're building Gold Corp. And I was totally focused on building Gold Corp. And I get a call from Lucas's banker. It wasn't Lucas directly, but Lucas's banker saying, Lucas wants to, that thing you just did down in Mexico? Lucas wants to do that in Sweden. And so that was our second deal. Within a month, we did the zinc-driven deal with Lundin Mining. And the beautiful side of that transaction was that Lucas had bought zinc-driven off of Rio Tinto. Rio Tinto builds really good quality mines, Cadillac operations. He bought it off of Rio Tinto for $125 million. He came to us and said, I'd like to say the silver. The silver's about maybe 15% of the revenue there. They produce just between 1.5 and 2 million ounces of silver a year. I said, I'd like to sell you the silver. And so we gave him $75 million, but we didn't have $75 million yet in the bank at Wheaton, or Silver Wheaton, I guess. So we gave him $50 million in cash and $25 million in shares of Silver Wheaton. Within 6 months, those shares had more than tripled in value. 25 times 3, 75, plus the 50 million. Lucas has got a free mine. He doesn't have any silver from that mine, but he's got a lot of lead zinc coming from that mine. And Lucas, for the longest time, would describe, the value. So it's, I guess that's a way of highlighting that this is a model that delivers value to all the stakeholders. What we're trying to do is unlock the fact that you've got precious metals buried in a lot of these, it works the best in the base metal space, but bringing that out from good quality mines to the investors is very, very important. So getting back to the comment, what's the trick? Good, solid technical backing. This, from the outside, for the first how many years, people with streaming, it's like that black magic. How does that work, right? The simplicity is actually confusing. Nobody ever, kind of thinks about it from that perspective. They think it must be confusing. And for years, we had to try and convince people that, no, this is simple, very genuine. And it looks very financial in terms of financial engineering. But at the foundation of it is, and this is so important, is sound technical opinions in terms of making sure, going back to what Telfer told me in 2001, what mines what to buy and what mines not to buy. And you have to have a technical foundation in your decision tree. It has to come back to that. So that to me is the single key to the success that we've had at Wheaton Precious Metals, is that we've never given up that. We've got 40 employees in the company, and more than a third of them, it's probably it's more than a third of them are a technical background, technical history, geology, metallurgy, engineering, social science, in that space. So.
Randy, let's bring it into the present day. You've been saying that in the last year there's been a lot of demand for streaming deals, and especially single asset companies. So why is that, do you think, and especially against other types of funding?
Well, in this crowd, I don't think I have to tell anyone, there's not a lot of support for the higher risk single asset project development companies out there. It's the market is as challenged as I've ever seen it in that space. And it's a shame, because when you look at the operators, you look at the big companies, they're all generating a lot of cash flow. They're all doing very, very well, but it has not been recognized out there. And I'm a bit concerned that what we're seeing is more and more investors are shifting their way, taking the easy way out and going to indexes and chasing down that path versus taking the risks and the potential rewards in the smaller cap space, within the mining space. And this part is integral for our success in terms of going forward. The time has always shown the big guys do not explore well. They do not develop well. Very inefficient, and have great challenges in terms of doing that. And so for us, the streaming model, most of the opportunities that we're seeing are single asset development companies. And we're not scared of taking on that earlier stage risk. Now, the streaming model has to work around a mining plan. And one of the reasons that I think it's done so well in the space is that this is the only form of capital that you can source that's based on the value of the metal, not the value of your shares. That's a real key difference. And I've heard some mid-tier mining executives out there in the last couple of months sort of complaining about streams and how single asset juniors are putting streams on and how it handicaps the project on a go-forward basis. First off, from a Wheaton perspective, we're not going to do it unless there's plenty of capacity left for the operators and whoever ultimately owns it after that. If our partners aren't strong, we're not strong. We have to make sure that there's healthy operating margins, and so we limit how much we'll take under a stream. We're not there to maximize that. If there's one lesson we've learned, is that this only works if everyone's making money. If there's someone in the stakeholder group, from the community perspective to the governments, that isn't making money, it doesn't work. So you have to build a holistic model. You have to sort of believe in the fact that whatever you're doing here has to deliver value to everyone on a uniform basis. And so I've heard some executives out there sort of critical about the streaming model as a source of capital because it handicaps. I don't think it handicaps it any differently than bringing in a joint venture partner or selling off a royalty. You get better value out of a stream than you do out of a royalty, and it's a much more flexible arrangement. It's got lots of capacity. A stream is actually a partnership where you're working together on a continuous basis. We're always striving to try and find ways to deliver value back to our partners, and we see a lot of mines. Our technical teams, the breadth of experience that they see, we get an idea of what best practices are and what worst practices are. And so we share that with all of our partners to try and help them be better, because again, the better they are, the better we are. Now, getting back to today's market, if you're a single asset developer, you're probably trading, most are trading, depending on the quality of the project, somewhere between 0.2 to 0.4 times net asset value. Every time you issue shares into that space, you're diluting your existing shareholders. It's very, very expensive. If you can do rights offerings, you can sort of argue that that's just sort of building the project internally and not really bringing in new shareholders. But every new shareholder that comes in is getting a good deal on all the effort that you've put into that project and go forward basis. That's why a stream is attractive. We've created, recognizing that there's an opportunity in the space. At Wheaton, we created what we call the early deposit model, where we actually will come up with a stream where a portion of that will be fed to the company, funded to the company during the feasibility stage, ahead of permits, ahead of the construction decision. And that is typically when the capital is the most expensive, because you've now advanced that project to a feasibility level, so should have the highest value attached to it, but your stock is still trading down at a substantive discount. And so I hate to say it, we're really busy, but we're really busy because there's a problem with the market. We can't do it all. There still needs to be that equity support out there. And so we just need to continue delivering successes and wake up those investors and bring them back into this space, because there are some really incredible opportunities in the space.
So Randy, sticking with that point about pre-production, of your last 9 deals, many of them have been pre-production companies. So is this a change in your approach, or is it just the nature of what you're talking about, where we are on the cycle?
Yeah, it's the nature of the market. Been in the business, obviously. We created the company back in 2004, and so I've had close to 20 years. We're actually, next year be celebrating our 20th year of streaming. In that time, I've seen what I would call 3 seasons. I haven't found the 4th season yet, but 3 cycles or 3 phases in the cycle. From 2004 to 2010, just about every transaction we did funded growth. Even that Zinkgruvan example with Lucas Lundin at Lundin Mining, he took that money and grew Lundin Mining. Zinkgruvan was the first mine in Lundin Mining. He took that money and built the company from there. So everything we did from 2004 to 2010 focused on growth. From 2010 to 2013, we didn't do any transactions. We put out over $4 billion in proposals. Most of us will fondly remember that time, because prices were quite good and everyone was making money and the markets were hot and alive. And I don't have a problem with that. Again, going back to the fact that I grew up in an auction house, the highest bidder isn't always the winner. Always remember that. Just because you're the highest bidder, you're not always the winner. And so I didn't have a problem with the fact that here we are over a 3-year period putting out over $4 billion in proposals and didn't get a single stream closed. And really what I call that season is the harvest season, because we already had a portfolio of assets, and with the commodity prices where they were, we built up an incredible war chest of capital just waiting for a turn. And sure enough, from 2013 to 2018 was balance sheet repair. That's where we got access to things like Antamina and like Stillwater and Salobo. The big majors had over-levered their balance sheets. They had way too much debt on their balance sheets. They needed capital to try and chase that debt down. And so they were selling off streams from world-class operations, incredible world-class operations, to try and get some capital to pay down the bank. And I would argue the last one we did on that front was probably Sibanye Stillwater, the Stillwater mine in Montana. It's an incredible asset that'll be running for hundreds of years. And you know, to be able to get an opportunity to invest in an asset like that is incredible, right? From 2018 until now, we're back into the development phase. Just about everything that we're doing is focused on development. Now, the challenge we're having in today's environment and why the last 9 streams are dominated by single asset development companies is that anyone that's operating in this environment is doing okay from a cash flow perspective. And debt's relatively cheap, getting more expensive every day, but debt has been relatively cheap for the last couple of, last 5-6 years. And so if they need outside capital, their first course of outside capital to help them grow is going to be on the debt side. Where we compete is against the equity side. And I think that's the appeal right now. So the big guys that are operating, they don't have to go to the equity side because they've already got that internal cash flow to satisfy their equity contribution towards whatever their growth is. But it's the small companies that streaming is becoming, is I would say right now, the preferred way of helping to source that. But it needs to work in concert with the equity side. And God, it sure be nice to see a little bit of strength into this end of the market right now. We need it.
So Randy, just following up on your comment there just a minute ago, rates have been rising, and the US dollar has been made very prime and of focus with the strength and the aggressive movement by the Federal Reserve. With your vantage point from the World Gold Council, which is not just Fed related, but just all things gold, supply, demand, and sentiment, and other things that you guys are trying to do. You want to talk to us about your outlook for gold and what some of the things that the gold industry is doing? And
Sure. So World Gold Council is an interesting organization, typically made up of mining companies. It's got well over 30 plus years of history. And it's an advocate. It started off sort of focused on the jewelry side, but it quickly became an advocacy group for the mining industry, really. And us streamers and royalty companies have sort of populated it over the last 10, 15 years. But it was really sort of focused, and it represents the gold mining industry. And to be honest, the membership itself captures it's just over 70% of worldwide gold production. So it's a pretty representative industry from that perspective. Back in the early 2000s, of course, it created the first of the gold ETFs, the GLD, and still owns and manages that ETF along with a couple of other products. And so it's a very, very strong organization, and its purpose is to be an advocate for gold as a whole. And so I took over as chair just over 2.5 years ago, and I had the benefit of coming on shortly after we'd changed CEOs, and so we had a new management, it wasn't a new management team, it was really the CEO. The rest of the team stayed there. But being a CEO, he had his own vision as to where he wanted to go. And David Tate is that CEO. He's a former Credit Suisse banker who, the way I like describing him is, he's excellent for the job because he has no idea what he can't do in the gold space. He'll try everything. But probably his biggest claim to fame prior to taking this title on was that he was the head banker at Credit Suisse that shut down their entire commodities trading division because of lack of transparency, the risks that were there in terms of being able to move materials around, settlement periods, et cetera, and stuff like that. And he says, the whole commodity space is just rife with challenges and perils, and Credit Suisse walked away from it all. And he was the banker that pushed that button. Now he's sitting there saying, working for an advocacy group for gold, which is, what I would say is incredibly important. What are we going to do to improve this? And so I've kind of let him loose, and between the entire team and the membership is very, very supportive of this. We've come up with this concept, this initiative we call Gold 247, and so 247 stands for 24 hours a day, 7 days a week. And I remember when David first came into, we sat down together in London, had a meeting, and he says, yeah, we've got this great initiative, it's called Gold 2030, and I looked at him, I said, 2030? We got to change that name, 247. So it's, and it will be delivered long before 2030, but it's really, we're going to change, and it's going to be additive. So this is not going to change the way people currently trade gold unless they so choose. But we're going to digitalize gold. The technology is there, the strength is there, the desire is there, the intent is there. You listen to any of the regulators. I'm just reading again this morning about the investigations with respect to the nickel market in London, the fiasco that we had last year. On the LME, and the LME is investigating it further. We have to improve how commodities get traded, and through combination of blockchain and all sorts of other digital infrastructure. There's no reason why we should be still focused on 5-day settlement periods or in any commodity going forward. And so what we've got at the World Gold Council is a group that's incredibly committed to it. They have the capacity. We're a very well-funded group. We've done very well on that front, and the desire to take gold another level up. And if you start thinking about, if you can get to the point of instant settlement in gold, in terms of digital, and you have the confidence and the faith that the digital token that you have on your Apple Watch or whatever digital device you choose to interface with the world in, you're guaranteed that not only that it's backed by gold, but you can actually source it if you want to dive deep enough. Where is that gold? It sits in a vault and gets fractionalized and moved around based on minimum units. Some might call it it's starting to look like a currency, and so we're in the process of working with all the institutions, because we think it's best to try and get their ownership of this first, and then have it spill out into the retail space. And when I sit and think about from a perspective of where gold is and where it's going to go, I would describe 2022 as the year of the U.S. dollar. We saw the strongest U.S. dollar we've ever seen in terms, especially relative to other currencies, relative to so many others. Gold actually did relatively well relative to the U.S. dollar, held its own, but incredibly strong U.S. dollar, strongest we've ever seen. I really do think that we're moving into the time for gold, for precious metals. There's one issue that we saw last year that sort of kick-started a sort of a thinking process about the U.S. dollar, and that was and for all the right reasons, but the weaponization of the U.S. dollar against Russia for that invasion in the Ukraine through limiting their access to SWIFT. And every central banker in the world that has U.S. dollars in their central bank reserves is now looking at that U.S. dollar and thinking, I used to think that this was a non-political device or entity. And I've just seen an example of it becoming political. And so for the last 8 months, we have seen record purchasing, record buying by central banks around the world in terms of the amount of gold that they're putting in. And that's all U.S. dollars coming out and gold coming into play. And so we do think that gold, I think we're at an incredible time here right now in terms of where we could possibly go. And this doesn't change the way traditional people own their gold. You can still own your physical gold, you can still bury it underneath in the backyard or wherever you want to keep your gold. But what this is going to do is open up the ownership of gold. Accessibility is one of the key things. Fungibility, trust behind it, knowing what's behind it, backed by the World Gold Council. We're working in concert with the LBMA and a whole bunch of other bullion marketing associations. We're working in concert with the vaulters and everything. It's a coordinated effort to just bring the trading of, and I'd say the trading of commodities, that's where we're getting the banks involved, And gold currently, is classed sort of as a commodity from their perspective. But if we're successful in getting there, it sure looks like a currency. And so pretty exciting.
For sure. So just to be clear, a 24/7 gold digitized coin would represent what? First off, it's backed by the physical metal.
That's right.
And it represents 1 ounce, or you could buy it fractionally, or how would that
So
work?
you have to talk about purity. So the standard right now is not going to be an ounce. It's probably going to be a gram, just to try and keep it a little bit more reachable and accessible, but it'd be a gram at 0.995. And so if you happen to have something that's 4 nines, it's actually worth more than that 1 unit. And so it'll reference to that, and that's how you measure, is by that standard gold unit. That hasn't been decided yet. Now, obviously, that's the approach we're taking on a go-forward basis. And I think that does make it easier and more accessible. Gold by the ounce is pretty pricey. Mind you, it might make things seem cheaper if you're, my dinner this weekend only cost me 2 ounces.
Let's get back to Wheaton Precious. So you invest in the Americas, but are you looking at Africa, Australia, Asia? Are there opportunities there?
Well, there definitely is. Not a lot in Asia. First off, political risk is very important to us because when we invest into an asset, then we step back and we're a silent partner. So we don't have any ability to control political risk, partner relations, community relations. We have to rely on the operator to do that. And so if we're in a stable jurisdiction, that's very important. If we're in challenging jurisdictions, that can be very expensive for us. And so political risk is something that we're very, very sensitive to. And there are ways that we can structure agreements with bigger companies that have diversified, broader exposure where we can say, look, we're not happy taking on this political risk. We'll give you a way better value if you keep the political risk yourself. And there's a number of times I've had to remind people that we're in the gold streaming business, not the political risk streaming business. There's a big difference there. But we do have a lot in the Americas, but we did start off as a silver company. And I tell you, Mexico and Peru are the dominant silver producing nations in the world. And so the Americas was just a natural place. So really for the first 10 years of our existence until we shifted focus into gold, it was always North America, South America. Funny thing about Africa, there's a bit of silver up in Morocco, but not much anywhere else. As a continent, it's interesting from a geological perspective as to why there's so little silver anywhere in Africa. But there's silver in Australia, there's silver in Asia, and there's of course gold in all those places. So we're comfortable in several jurisdictions in Africa, and we're actually actively looking at a couple of projects in Africa right now. We do have some projects in Europe. Love Europe. It's just a very challenging place to build mines and operate mines. They're happy consuming the materials, but they don't want it produced in their backyard, and it's a bit of a challenge. Society needs to do a better job of that. Of course, Australia. The challenge we have in Australia is that there's a lot of restrictions on their superannuation funds, their pension funds that they have in Australia, in terms of investing outside of the country. And so if you think about Australia and you can't invest outside of Australia, what are you going to invest into? Yeah, there's some decent wine, but other than that, it's the mining industry. And so I would say Australia has the benefit of probably a bit more capital, trying to find places to invest in the Australian mining industry than other jurisdictions around the world. And so we've been competitive there, but we've never closed the deal yet. Asia, there's not a lot, there's some jurisdictions there, but again, we run into problems where, if we don't believe we've got the confidence of law, we're not going to be there.